It's time for Power Hour.
Hello, traders. Welcome to the early stream where a little warranted with the bank crash continuing. How could you be surprised? I don't know, man. Hopium and just starting out with, I think, kind of the centerpiece of the day, which was, I mean, this was thought to be the next one on the chopping block. As the tweet yesterday, the Grim Reaper knocking on Pac West Bancorp, and yeah, he just maybe put his hand on the doorknob and is turning it right now, and he's about to make his way inside. As you can see, this asset coming right back down, virtually, I mean, $5 target, right? Just yesterday on the street. Well, you know, if you're breaking down the target price discovery, probably to go retest that low from, you know, March 13th, when the Fed injected, right, in a 2-week period, $500 billion in order to do nothing, to pause the crash for what, a month? And now here we are right back to the same situation, and down 26.57%, but at one time today, at its lowest low, at its nadir, you were down 40%. And now you're at $6.66. Let's get some Jesus chimes. Let's exercise this loser regional bank. All right, because Bitcoin is right back up against $28,800. Pivoting, and this was saying, like, until it breaks, even to make a local lower low, Bitcoin's fine. It just, yeah, it's not really like at a great actionable long area based on technicals so much. But again, very similar to the way Nvidia looked, where just higher lows locally, quietly, subtly, just you can't even tell. And then you've got the direct competitors crashing, halting right today, because it's not like one bank. Oh, this may be the centerpiece, but there are others that are like dumping to the similar extent, where it's no longer like, oh yeah, yesterday was FRC, and then SBV was before that, Signature Bank before that, whatever. Nah, man, now it's like, oh, we have like a handful of regional banks in one day doing the same thing. CMA is another, Keys one, and then you have Wall, WAL was the other one. I don't have that. That's not even on my watch list, but down 15%. It was down like 25% earlier. Why not $7 in time? It will. You know, gap filled. Hey, we had earnings, just like PACW had earnings and you gapped up. Doesn't matter, man. Like, so there's just very, very little. I don't know. I guess like you could say 28.66 is some sort of inflection point on wall. And it's been tested today, and once that breaks, man, bye-bye. You get cut in half, or more, really. My God. How much would you, if this area is not defended by a buyer successfully, you have a 76+% downside, and there is hidden bearish divergence there. It's on all banking stocks, regional bank stocks. Hidden bearish divergence, implied continuation downward. Yeah. So list all those tickers of the ones that are. Maybe try to find. Just give me a second, because I have a ton of banks on my watch list, but I don't have like literally all of them because there's so many regionals, right? Thousands of regionals. Remember, like back in the 1920s and 30s, there were like 41,000 regional banks. There are now like 4,000 regional banks. And guess what's happening? Another like meteor for the banking industry is ongoing and this is induced by the Federal Reserve for sure. And tomorrow we're going to find, if they don't raise the basis points by 25, right? Then that means they're panicking. They are finally freaking out, and it's bad because when the Fed pivots, we know historically that is when the major markdowns ensue afterwards. So yeah, it really is. I tweeted. It's like it's a joke, haha, funny, haha, but this is real. This is so real here. And, you know, it's Twitter, okay, funny memes, but this is a great way to look at it. The Fed is trapped. They are so screwed. And I think it's just because they waited way too long to start raising interest rates. Way too long. So, yeah, the Fed is trapped as we're all, you know, in our dorm rooms in filth. Yeah, that's it, man. That's where we are. Audio check. We good on, you know, hear the music at least a little bit. Sophie, yeah, Sophie in trouble. Let's look at that. It's bad, man. Really, really. Look at this. Look at this level. This is it, man. The last, I mean, one of the last lines of defense, it's the ice line, I think, from May 10th. I think this is all-time lows. Yeah. This is one of those newer losers. Hey, remember that Sophie Bank, we're going to use all that money to buy the naming rights to a stadium in California. Hey, I think we remember, wasn't there some sort of crypto scam that had naming rights to somewhere in Miami? Wow. All right. Sophie Stadium, naming rights coming to be soon. It'll be available. Maybe we can get the Pepe coin holders to take over when Sophie, seems like inevitably, completely collapses. I mean, to bankruptcy, insolvency. Next target below 490 is 424. That December low. That's crazy. Think about just someone did it. Someone bought at 652 on the gap up yesterday on earnings. And since then, it's down 27.5%. This is not crypto, man. This is. It looks like ICP or something, doesn't it? It looks like an S coin, like technically. Just this drawdown, and then yep, no one's gonna buy it. It's as good as an S coin now. We're finding out. Okay. So I'll add this one to the list too. But there was the other one. Start with the M. What was it? Yesterday. I can't remember. I want to look at that one. Or maybe it started with an M. Yeah, I don't think I'll ever find it. Yeah, because there's so many, man. That's the problem. Look at Key Corp. Oh, look, you know, I mean, just look, you're about to make the lowest daily candle close since May of 2020. And guess what? This is the ice line. The ice line of ice lines. Talking about how many touches? April of 2009, May of 2010, February 2011, February 2016. Price action correlation, obviously, during the COVID crash. And here we are at one reaction in mid-March when the Fed panicked and printed all that money, and all for naught because you're breaking that currently. And you just got to understand what kind of consequence this could be if there's any follow through on this bearish breakdown that will be confirmed in less than 12 minutes. Key Corp. Your next support 746, and that's just to be nice because it was like some in high volatility, crazy, scary black swan events. Sometimes sellers will be able to take the price below the ice line, but I think it was kind of that was a joke. And so then buyers kind of recovered and recaptured those levels, even back tested a little bit before going higher. So that's like me being nice because that was kind of like, this was all correlating to this ice line, you know? So yep, 746 would be, what does that mean? Like just going to that next level, that next swing level. Oh, that's just a cool 24% downside. This is just like altcoins. Like this crypto, but for banks, man. To know where we are, Key Corp could be awful. I'm just having an alert set up. We start seeing the lows. You know, any beep below 980 is a bearish breakdown. All right, TFC, Truist, yeah, awful, dude, awful. All right, rivaling the low from this was the SBV, or was it the signature day? Can't even remember. It's losing. my ability to remember like which day was which coin, you know, but that was a real bad one. No, it wasn't SBV. It was, which one was it, man? Oh yeah, I think it was MTB. Yeah, let me, I think, and maybe, I think it was 4 letters on the ticker. So, MCB? I'll add it to the list either way. Yeah, I'm screwed. Yep, down over 20%. So regardless, you've broken an ice line from 2016. Look at that. This is how you know it's real, right? Because during the COVID crash, I was talking about volatility, you know, the buyers finally recaptured the level, and then look at the formal back test, May of 2020, before the major rally, the spring back test of spring. Beautiful. But you're below it now. It's over, dude. This 23% plus downside here. Okay. TFC. Let's look at MCB. Oh, dude, it is brutal, man. So brutal. Yeah, just approaching the all-time lows. Here's the candle low close, the lowest candle close ever was 1823, and then that wick was 1517. You're going to test it. Not much more. A few percentage points till you get there. I don't know why it wouldn't. It will. Hidden bearish divergence, the lower high, just completely destroyed, man. Bitcoin's still right there at 28,730, testing 28,800, the level we all know, but still just can't break it right now. So close, man. Oh yeah, and Regions Financial broke it's over, dude. This is so screwed. I hope you understand. This is why we look at this stuff. We've been looking at this stuff every day. Getting pinged if you're in the Citadel. Right angled and ascending broadening formation. And yesterday was a confirmed bearish breakdown with a candle close, and today is the follow through. And it will be, in 8 minutes, the lowest daily candle close since January 5th, 2021. Multi-year lows coming in. And yeah, of course, the hidden bearish divergence was there. It's so bad, man. And you know, this is the only Fortune 500 company that exists in Birmingham, Alabama still. So it kind of comes close to home. Makes me kind of sad. But hey, you know, what are you going to do? The next target on this asset is $13. Meaning, from here, being down 7% today, there's still another 20 to 21% downside before the next low, the next swing low. Okay. Wow, man. Yep, silver gold looking like snacks, man. I know they've had good rallies, but this is a fundamental thing. This is definitely fundamental. And that's why it's just like, how do you not have conviction on Bitcoin? It's just like, yeah, the technicals, oh, the lower high got put in. We've been on the rally. We're unable to break 31K. We're up thrusting. We're back testing 30K as resistance. Oh, no, not value areas. But, dude, like outside of the technicals, it's just like, how does Bitcoin not go substantially higher? And I seldom will be talking about something like that because I always like the technicals to talk about the technicals. Man, almost like throwing it out for this particular situation. Not all the way, of course, because the level, you always want to pay attention to the levels. And, you know, again, TA itself is all about risk management, but we don't have to look at a chart always to be finding value or premium, right? So, okay, Regent PNFP. Look at this crap. My buddy asked me to look at this because it's a bank. It's down 6.5%, and there's still another 13% downside on this. There is no support here till $43, $44, clearly. So why would it not continue to just at least test that and then bounce, go to $1 billion or not? But I'm just saying that's the next inflection point, $43 to $44. You can clearly see it here. All right. And we can just keep going. Oh my God. Talking about capitulation here. This is capitulation. Yes, a form of it anyway, where you have a very strong level of support from history. And then it is disregarded when it doesn't even look like there was a support. Market participants just act like it doesn't exist. That's a form of capitulation. So you're capitulating through a key ice line, and you're coming down this 2018 low. You're below that right now currently, if you didn't know 5 minutes ago. And so that's brutal. I mean, unless somehow tomorrow they come in to defend that level and you break back above $30, this could end terribly. Wow, that's so bad, man. The next big area, you tell me, right? The next big inflection point is 2188. So that means that this bank, if, tomorrow we get back test $30 as resistance before rolling over later. That's what the regional bank ETF did. I haven't even looked at that yet. From here, if this is a true bearish breakdown at 29.22, that's where you are. You still have a good 25% downside. Again, it could be a fake out, but I'm just telling you as it is right now, not tomorrow, not yesterday, today. It will be the breakdown. Not yesterday, you were above the level. You were going to maybe go test it, and nope, capitulated. Okay. Kind of getting like the hang of it. We could keep going on these bank stocks. Here's the KRE, which was beautiful, man, because just yesterday, I went into like the kind of in depth on the formal bearish back test of 42.83, the old all-time high from 2014. What was once resistance is now confirmed resistance again with a bearish engulfing candle. It's like you get follow through. Look at the follow through. The consolidation pattern's been breached. Hidden bearish divergence playing out. TA respected out like crazy on this. Gorgeous. And there's still a little more downside. I mean, 36.87 is definitely that next level. 36 bucks and change. Okay, you can see it. It's so easy to see here where you're what's on deck. So that means just like a little more downside, a little bit, right? Like 5 to 6% more downside on KRE before it hits the next inflection point. Oh, and we had some supporters of this community that came in last night and today. I do want to play Jesus Chimes for them. So, Crypto, thank you so much for the 4 months of support in the Citadel. I really appreciate that, man. DDD, Triple D, thank you for joining for the first month yesterday. Oh, no, today, this morning, excuse me. Thank you so much to Crypto Shrooms for joining the Citadel for the first time. Thank you so much, dude. I really appreciate that. And Crypto Ghost, thank you so much for the 4 months of support in the Citadel just a little while ago. And thank you so much to St. Thomas, who has been supporting the community in the Citadel for 5 months now. He renewed to just about 30 minutes ago. Thank you all so much for that. I really appreciate that. 100% crowdsourced. So without y'all, that's it, man. Right? No sponsorships to scam coins, like so many others. You can also join the Patreon, patreon.com/MitchRayTA. That's pinned. It's it's the exact same thing, but that's just it's another means. It's all identical to Citadel membership in the Discord. Okay, so let's go to Bitcoin. Just why not? We haven't been there yet, right? Only been banks so far. And this is it. This is where we are. And I drew that. I think it's still kind of horizontal, and it helps you see that it's a slightly lower low than these lows. But this isn't like Nvidia did the same thing. So look, that's the level, right? 28,800. Oh, a new thumbnail. Let me try to put that on real quick. Hold on a sec. All right, sweet. Chillin'. Still need that Pepe. Yep, so 28,800, the level of all levels. No one could argue. There it is, January 2021, June 2021. You're right back at it, testing. It could be, though, that you've broken support, and this is a formal bearish back test. What was once support is now resistance, flipped resistance for the first time. You know, there it is. Closing bell is concluded. Ding, ding, ding. Stock market is closed. Now it's going to be interesting to what happens to some of these banks after hours now. Well, history's telling us that normally after something like that, terrible things happen. More downside. Yeah, is partial rise or partial decline? Why are you saying partial decline? You know, no, it wouldn't be. The asset would need to test the bottom of the structure before rallying, then making the lower. And again, it would be a partial decline would be something like this. No. And that would be a partial decline becomes confirmed at 33,000 if that was the case. No. Now, partial rise could be confirmed if Bitcoin tests 26,650. That would be a confirmed partial rise, I would think. And that would be high probability breakdown chance. But that hasn't happened yet. And that's what I'm saying. Like, until you come down to these levels and you take out even your lowest low from the 23rd of April, I mean, it's just higher lows, more, that's accumulation. So the stock market has closed. Bitcoin 24/7. And yeah, I don't know. I just kind of went live because banks crashed. Yeah, that's no, I just need it for a source saved on my PC. That's it. Okay, so all I needed. Yep, there it was. Little Pepe right there, and have the banks on currently. Perfect. All I was looking for right there. Thank you, Jalen. All right, so I know, man, everyone gets hyped when Bitcoin does things, but dude, it was just, there are other things going on in these markets. I hope you understand. And then Ethereum's up 2%. Look at the 200, or not the 200, but the heart line of this channel. Buyers are trying to defend it again. How legendary would it be if the heart line's defended? And a run back to 2K and then to break it. And it's just wild, man. I mean, it's when such a, you know, you're in this midterm uptrend here. You know, the banks are collapsing. You know, this is an alternative system to the fiat Ponzi scheme. I mean, fundamentally, Bitcoin, Ethereum, it couldn't be better. And the way during the carnage for these banks, the way these assets are holding up is nothing short of incredible. I don't care who you are. I know people talk crap about crypto because in a lot of ways there isn't much intrinsic value in most of crypto, and in most of it is a scam. It really is. Most of it is. But, you know, again, when you start talking about Bitcoin, Ethereum, right there, maybe even BNB, like those are the way they're holding up. It's like, oh, this might be valid. This is these are valid assets. The whole argument, the reason why they were created is going on, and it's valid. Speaking of BNB, which I know it's down 1%, man. It's like stupid. Really stupid. Like, what is going on, man? Like, how's Bitcoin like rallying? Ethereum's at 2%, and then BNB that was looking kind of the best because of just the absorption of supply at this ice line. It's just, why is it not a percent or two with Bitcoin and Ethereum? It's wild. So still, and Golden Candle's not dead yet. It's still valid. And it's still not doing anything bearish yet. It's not even making a lower high than the previous local high from just the 21st. Win breakout, man. CZ, what are you doing, dude? And then XRP down 0.22%. Oh god, just like whatever. I just look at it because it's one of your largest cryptos and it exists. So yep, fine. Okay, cool. It doesn't ever move, but yeah, eventually 80 cents, but you could be a year older than you are now. Happy birthday. XRP's 80 cents. All right, maybe. Again, I'm digging. I like Monero too. Monero's also just trying to hang in there. I guess. I mean, it's still a great argument. It just takes so long. The liquidity's gone. There's no liquidity in this market. So if something's going to play out, it just might take forever now. So in most altcoins, that's the case. That is the case for them. They just... We've already been discussing this in previous streams where something fundamentally has changed, where there's just not enough liquidity in crypto for all 18,000 to exist or to even perform or to even have a market made for them. Look at this weekly on Bitcoin. Do you get it? Right? When we were looking yesterday, oh, I'm so scared. And then it was like, oh, look at the weekly, no big deal. And it's even less of a big deal now. It's like, it could be amazing. You're just, we have 5 days, 4 hours till this close. Anything's possible. Still above the bullish control zone. Very nice there. Wow. Here's the quad screen. Here's Bitcoin on the 60 minutes. Wow. Is that a shooting star, man? Could be. Shooting star at resistance. Oh god, here we go. Oh god. Well, all that needs to happen here is if it does usher in some sort of reversal, just a higher low than the previous low, and you'll be fine. Man, I'll tell you, look at the 60-minute on Ethereum. Like one low, the second low trying to be put in. That's crazy. These two lows, substantially higher than these lows before. Man, that's not too bad right now. And, you know, here's B&B that's down today, but dang, still like, you know, the lower highs. Oh man, concerning. But now a low it's higher than previous low, then a higher low, and now maybe another higher low. So it's definitely price contraction, right? You've got lower highs but higher lows. Okay, that's pretty freaking neutral stuff, right? Neutral stuff on BNB. Look at that, yeah. Wow. And then XRP 60 minute is just whatever. I don't know. It's just 40 cents back test will be cool. But if not, whatever. Just going with the macro. So, yep. There you have it. The big four. And it's just starting to get to a point where with such illiquidity in this market, the point of looking at some of these altcoins just starts becoming not even that important anymore. I hate that because people care about crypto, and it's just like they've kind of neutered the market a little bit because this market has to have liquidity. They just these assets can't move, man. Let's look at the S&P. Guess yeah, that fair, man. S&P, I thought we were gonna be kings, man. I thought everything was good, right? But no, there was reason to be a little. I mean, still, it's not over yet. I mean, tomorrow it's green candle engulfing. Oh, we run to 4,200 finally. But you know, there was like kind of a shooting star, evening star yesterday, a green one, granted, but still. Not making higher highs in the February high, and in fact, not making higher highs in the August high. You're just matching those highs. And there is bearish divergence from one high to the exact same high, lower levels relative strength, and the daily S&P. How about that? I mean, you know, again, these things can change, but today you can see it like the buyers attempted to push the S&P 500 index fund back above the bullish control zone on the daily, and they failed. You tried a couple times inside the bullish control zone, 1 and 2, and then it just, no, it stalled out back to neutral and now failing, you know, just, it's not really good. It's not really bullish. on the RSI right now. Dow Jones, or you can't say it's good yet, and that's the reason why. The shooting star, potential shooting stars confirmed now with follow through.
Can we look at CDE daily Mitch? Closed nicely. Roll tide.
So William.
0.00061870 BTC.
I mean, we can certainly look at CDE. Seems like, my schedule is pretty open here on requests. People don't request anymore. It's like, it's over. So yeah, well, I guess we'll look at it. Gold miner, yeah. Guess what? Gold went up, so gold miners went up even more. That's how it goes. They're S coins to gold. So this right here, man, and we were talking about the local confirmation high. Each peak had a confirmation, right? This peak had its confirmation high December 13th. This peak had a confirmation high in early February, mid-February, and now it seems like we might be trying to put in the second peak here, the confirmation high locally here, which unfortunately is one peak, the second peak, the third peak, three falling peaks, and now closing below 33,729. You're starting to break back into this kind of mega inflection zone where below 33.7 equals 33.2, and there's the hidden bearish divergence that if you're in a long-term downtrend, it could be reliable, and if it is reliable, it could very well outperform. That is yet to be seen. I think we need more time, of course. But dang, man, that's the beauty. Maybe like in the end, if it does draw down hard on this, it would be certainly educational to the people that give a crap that watch this stream. That, again, everything I know is from like people really smart that are published and all that. I just learn from them, and I try to be the conduit from those people to y'all. And so it's like, if this does play out, man, how about that 886? How about the psychology of buyers and sellers? How about value perceived areas for shorts at 886s and downtrends? I mean, this is seminar. High to low 886, high to low 886. So amazing. Okay. NASDAQ. There you are. So buyers are defending 12K, but just like yesterday, you have not made a higher high. You haven't. And guess what? There's still bearish divergence up here. And it looks like, you can't get above 60. You've failed already on 13th April to break back into the bullish control zone. You can't do it. And now it can't even test 60. Not really like good, man. I mean, just I hope it holds and we go to 1 million, but it's just wasn't a good day. And you're trying to top out maybe. IWM, and that's what I'm saying. I don't trust it. I do not trust the IWM. Until, who cares if you had a few days of a rally that did what? Nothing. Until you were going to take out 180, 179, 66. You would have only confirmed distribution. That's it. And look now, the signs of weakness coming in. And I'm telling you, that is certain signs of weakness. I don't think this holds, man. This is so ugly. This is not the way price should be correlating. I mean, we should already be at 188 by now if this was all real. And so once you break this is the last line. You're already below the 2018 peak. And now you tested and your buyers just barely defended it with those limit buys today, that January pre-COVID crash high, 2020. Piercing line. Reversal. Underperformed miserably. Buckle up, man. Buckle up on the small caps. Small caps are telling the story. They're screwed. Because it's like the bottom 1,000 of the Russell 2000. Oh, can someone? How do I get that up on the chart? Let's see if there is a ticker for it. don't know how I can get it, man. It's just like you can get the top 1,000, but to get the bottom 1,000, how am I to get that? You know, because it's terrible. I saw a chart on it, and it's garbage. It's like way worse than this. Like crashed, like in the past few days. But it's just like under the hood. You know, the only reason why these index funds are even holding up like they are is because of like 5 major companies. That's it. And that's just like 1999. You had, you know, normally in a bull market, we want a broad outperformance, right? We want broad, and when I say that is like you want a lot of assets, tons of the assets to be performing well. But it's like the index funds are kind of like an illusion because it's so much worse if you take out those. It's like total 1, total 2, total 3 or whatever. You know, you go to total 3. Okay, that you can see. I want to see like what does the S&P 500 look like without the top 5 as in the aggregate, right? So good luck, man. This one's awful. I mean, the other ones are like, oh, it's kind of bad, could be bad, but hasn't really started doing it yet. Look at this gold, man. Bullish engulfing candle, $2,016. About to be the highest candle close in less than its power hour for freaking gold, metals, commodities. 2,000, let's see, April 13th would be the highest close. So again, the pause, but like, don't worry. I mean, it's like, it's higher risk fundamentally for long because of, you know, that's what at 886 is, but you know, fundamentally of the technicals, right? You know, it's like all this would be buying high, like buying at premium, 88% premium on gold, right? On the rally here. But it doesn't, but fundamentally we understand about the central banks and them buying record amounts, and the US dollar is certainly losing its hegemony over, it's like eroding, you know, at its fastest rate ever, I think. And that's why conviction on gold too, and silver. Physical though, I mean, paper, okay, they're gonna manipulate it, and I think it will go to $3,000+ eventually. But like it could just take months. But physical gold and silver, knowing, you know, the monthly, how long the monthly could take to play out to get to that $3,000, $5,000 level, you could own physical for a long time. Participate that way. So yeah, great day for gold. Up 1.73%. Remember, this is like a $10 trillion asset. So for it to be going up almost 2%, it's a pretty big deal, man. Strong. And then silver, also a great little engulfing candle today. Got about to have your highest daily candle close on silver since April 13th. I love it, man. Again, above $26 is the breakout. That's the big one, taking it about $30. Wow. US oil, bear trend, remember, and collapsed. Some sand. You had a bearish breakdown. And look, the lowest daily candle close on US oil, well, in 2 hours, it'll be the lowest close since March 24th. It's done, man. This is a bear market. This is reconfirming the trend is still bearish. And $60 target eventually. Deflation hype. Natural gas also continuing to collapse. It's like, oh, potential bottom maybe, but it does, you know, whatever, man. It doesn't have to be this. It's not a real double bottom until it breaks out, and it's not even close. It's pathetic so far. Just a short-term second low, just to make a substantially lower high and come back to 216. You break 216, back to 190 and lower. God, it's brutal, man. Rice futures continuing its ascension. Wow, look at that, man. That's just stupid, dude. This is, you know, get your sushi. Get your A5 Wagyu sushi with your side of orange juice while you can. That would be the most expensive thing you could ever get. You'd be FOMOing into a nice A1 Wagyu sushi roll with a glass of orange juice, man. If you want to flex your wealth, forget Rolexes, forget Bugattis and Maseratis and Lambos. Just do what I said. The ultimate flex. And anyone that's in the know, which is like no one, they'll understand. They'll see you eating that, and they might come up and they might shake your hand. Be like, dude, I get you. But then, you know, and the seafood's also still way down from its high, so it's not even like the same. Like, you can't even be like, oh, I want to get a bluefin tuna roll. Because gray seafood is just not at all-time highs or near the 52-week highs or whatever. Orange juice up, you know, marginally. Oh, hey, trying to defend that February 10th high as support, and that's it. It's not going to end well. Eventually, it's going to be so bad. And orange juice at the store will still be elevated, but one day this parabolic uptrend will end, and it will end violently. There will be riots like there are in France, but for orange juice. And then that's it. Like all the other commodities down today. For the most part. I mean, like, you know, feeder futures, sugar's down, copper's down, wheat's down, soybeans down. Not down by too much, but like, look at this, you know. I mean, I think it's deflation. Like, we have like, okay, the cycle for commodities is kind of over. Not precious metals, different. But commodities, commodities are not stores of value. That's why gold and silver is doing what it's doing, kind of platinum too. And commodities are kind of all like it's over, right? We found the top on these. They reversed at like their previous cycle reversals back in 08 and 20, you know, whichever, 2021, and then back here in 2012. I mean, and now that move ushered in the entire reversal. The cycle's done, right? And so what's happening after? Bearish consolidation for a very long period of time, right? We're talking like, how many days of bearish consolidation here? Talking like 260-day large rising wedge, and you're out of it now. And what's happened now? Like 1430 to 1450 is a very real inflection point on soybeans. Look at this. You just yesterday back tested it as resistance. And what are you doing now? You back tested it today and you're rolling over. So you're like bearish engulfing after the formal bearish back test, and the downside would take you to 1300 again. Ugly, but beautiful. Beautiful stuff, man. Like rising wedge, bearish continuation can be very reliable. Let's see how well it performs, because it's valid right now. Very valid. Corn chart, you telling me the cycle's not over? It's done, dude. Corn's done. This was your dead cat bounce of sorts, right? High to low, 50% retrace, and now classic distribution. Yeah, man, look at corn. Corn reminds me, this is a very bearish continuation in its own right. Where you have one peak, then you have a second peak, and now you have a third peak, and very proportionate. This is a beautiful looking bearish structure. Confirmation line was right here. You broke it. $6. This is a confirmed, 3 falling peaks. And I wouldn't even be looking at a harmonic up here. You're out of your mind. No way. The summer, it was beautiful. You couldn't even make up how perfect it was. But now, after the crash, a 50% retrace, Dow's theory, and then the bearish consolidation pattern developed over the course of like 200 plus days. Lowest daily candle close in 35 minutes since July of last year incoming. Look at the 200-day simple moving average being regarded as resistance and rejected. That's a real big tell here. Okay, commodities are done. Food commodities, most of them are done. Corn, cotton, wheat's been done. Here's your wheat. It's been done, dude. Low, like broke support a few days ago. Lowest daily candle close since April of 2021, multi-year lows. And again, You broke support, so where else is there to go but to mark down? The cycle's over. You get it? Okay, I just want to make sure. Remember, this was the war, February 24th, 2022. The pump, and then the all-time high test all the way back. All the way back from 2008, and that was the top. And that's how it goes for these commodities. All of them virtually went up to those levels, tested, rivaled them, and it's over. Love it, man. Freaking love it. That's how it's supposed to go. That's real TA. Okay. Well, anyway. Most people don't give a crap about commodities, which is okay, dude. Oh, look at Pepe coin, dude. I care about Pepe coin. I don't care about anything else in the real world. Let's go to that one request I had. CDE for William. Thanks, dude. CDE today up 2.42%. Almost a piercing line. I don't know if it went 50%. It was very close. It might not be a piercing line, but this could be it, right? Yeah, the problem is 340 was formally back tested as resistance, as well as the 200-day simple moving average. Yikes, man. On the daily, that sucks. You wanted to see a close above 340. Why 340 is so important? Look at it. It's this level back from 2014. It's an ice line. It's a peak from 2015. You don't want to be below that. You don't want to back test it as resistance. But yeah, there you are. That's what happened with it today. But if gold keeps going, this will get back above that level, no problem. It's just for now, meh. Could be way better. But yeah, these are at like basement levels. These patterns are just so large though that it could just take like a year plus for any resolution. You just be waiting and waiting and waiting, chopping for, you know, for an entire 10-month period, 11-month period, just sideways. But you give it another year and you may very well have broken out. Is the stream down? Uh-oh, is this... God, of course, just what I need. My internet seems fine. There's no volatility at all. SMCI, that was it maybe? No, or is that? I'm not sure. No, that's not it. It's totally fine and has been fine. Okay. I don't know, man. Sounds weird. All right, so the VIX finally did it, man. Up 10.5%, 17.77. It was a way more like on the day at the highest high. Well, it gapped up, right? So it was up 23% at one point today. You know, really just tested 19 as resistance, but I mean, support resistance on this is kind of a joke a little bit, just because like this just isn't really like the TA thing. This is just, hey, people get scared. 30 days looking forward, right? That's what the VIX says. People are like, hey, within the next 30 days, there will be volatility. That's what's implied on the VIX. Okay, so a rally, but nothing, like a joke, right? Just rivaling the days of 26th and 25th of April. But yeah, that's a spike on. You think it'd be worse with banks collapsing, but rest of the market's not. I mean, they drew down, but not dramatically. No critical support's broken on the index funds yet. Yeah, those gold miners, man. Like, look at this. NGD, yeah, it's down 2% after hours, but it was up almost 8% on the day. And a breakout, well, you know, it's a breakout of sorts. Wow, look at NGD. Daily candle close breakout confirmed. The high from February of 2019. That's what I'm saying, man. These metals, they've been looking crazy for a long time. Like they've all had these completed M shapes over 1,000 days. 1,000, right? 2020 to 2023. It's all about gold, man. Spot price can just keep going. These things are gonna fly. Carvana though. Oh, Carvana's up 4% today. Great, dude. Yeah, no, like Etsy's up 3%. You know, after yesterday we were looking at it and it made its lowest daily candle close since November 9th of last year. But then you have piercing line, maybe reversal today. I don't know. Was it earnings? No, earnings is tomorrow. Wow, earnings tomorrow. So maybe it pumped leading into that. You just don't know. But in before the coin flip. But that's terrible. You'd think way lower on Etsy eventually. Yeah, Amazon was up today. Buyers trying to defend here. I'm not going to say they aren't, but that's a piercing line, potential piercing line reversal ongoing on Amazon. So you've broken out. You're trying to back test the breakout, and you got a piercing line reversal. The issues, the daily bearish divergence, and an 88% retrace up here from this previous high to low. I'm still not really sold on it yet, but maybe if we get some follow through, it might be very real. Okay, just pay attention to what they're trying to do to one of the market drivers. That's an interesting couple of variables, right? Always looking to be identifying Japanese candlestick reversals at inflection points. It's where they're most powerful. Well, not even powerful, like reliable, like could catch follow through off of them and really play out and be a pivot point. Be sure to join the Discord if you haven't. It's free to join. Free to join the Discord, man. A very active community too, and that's like where the conversation continues when the live stream inevitably ends here. There it is. There's the Discord link I just spammed, so did Brad. Good God. Halliburton, I think energy's done, dude. Energy is done, and it all ended with what? Look at this. This is exactly what US oil did, chat. Look at the big run, and then the shark ushers in the entire reversal. I think it's over. Look, man. So commodities are done, and oil stocks, energy stocks done too. The 200-day moving average is now resistance. It's flipped resistance. A certain sign of weakness, not oversold yet, and going down to test $27, $25, I think. This is it. That was it for Halliburton. What about Nove? Look at Nove. This is also an oil field services equipment. Look what happened, man. Today. Well, was it yesterday? It was a couple days ago. You gapped down, and then 3 days of bearish back tests of this old demand line flipped to a supply line and rolling over down almost 7%. And we're talking the lowest daily candle close on NOV since September 27th of last year. I mean, how is that? And look at the bearish backtest, the 200, but also the ice line from history that had to be desperately held. You backtested and reconfirmed the validity of it. It's now resistance again. And look at the fall through. That's bearish. Very bearish. $12 target probably. Wow. I'll tell you, man. In phase energy, that right angle descending bottom formation. Look at that, man. It's so I love it, man. This is like just, whatever, streaming, okay. People don't watch anymore, okay. whatever. But these charts, man, they'll always make me happy. And this is the whole reason I started streaming to begin with. I didn't give a crap about streaming. This is what I cared about. Seeing an asset at the top of a supply line of a recognizable pattern, and on the second test, bearish divergence. And since that very real edge, the low risk short opportunity, since that was identified, this asset is down 55%. And I love the back test of 222 as resistance. And that's amazing. Gap down on earnings. I know that helped, but dang, man, heading on down to 120 from here, most likely. So perfect. What's up, Bauer? You just joined. Nice, dude. Thanks for tuning in. And look at Marathon. Come on, man. The argument was there. We're talking about an all-time high, major golden mean ratio from the old high of 2018 to the COVID crash low. A 1.618. Tested thrice, 3 different times. False bearish breakout. Really, look at that. A bearish abandoned baby up there too. Magic. Bearish divergence, of course, and broke down. And yeah, you'll be testing the 200 moving out. Maybe pivots and rallies and underperformance or whatever. But dude, this was the area to be identifying this stuff. I freaking love it. What about Hess? It's, oh God, dude. It's like head and shoulder stuff. I mean, this is like Momo shift. Could be. You're still uptrending on this. I mean, like, no, it's not like we just looked at the other ones that, like, oh, you're breaking a demand line, lowest level in a long time. This one could be a lot stronger, but look at this, man. I mean, if not, it's over. What about at least going to 127, $10 more, right? Hidden bearish divergence going on the right shoulder, a lower high here. Still an open gap at 134. Started with a harmonic. Yeah, that's not really what you're looking for. Freaking gorgeous. Chevron down 4.3%. And there she blows, right? Another major 1.618 fib extension from the I went from 2018 and 2014 high to the COVID crash to get this golden mean ratio. And for the first time, you tested it November 15th and a double top, a confirmation high, January 25th. And now breaking a demand line that goes back to September 2021. Falling back below the 200-day simple moving average today. If anything, watch. You just do this, and then you do this. And you tell me what the F Chevron really is here. Huh. It's magic, man. I don't give a crap. This is magic, okay? Absolute magic. Should be more follow through, okay? Now, in Exxon, in similar fashion here. Oh, look at this. Yes. One last little fake out. There was the 1618, almost, right? Was it what? Did it hit the 1618 on the butterfly? Oh God, it was so close. Hit a 16, not a 1618. That's it, 1 and 2 there. Now, of course, I could just pivot. It's above the 200-day moving average. It's above old all-time high, so it's not really like in much danger yet, like too much. But this could be the absolute top on these oil stocks. And then you go to the XLE, and if you don't remember, well, let's just go back to the monthly so you can see this and understand why the top's in, probably. The 2008 high on the XLE, which is the energy select sector. It's an aggregate of all energy stocks, okay? 2008, up thrust. 2014, formal bearish back test of the 2008 high, right? Not one time in June of last year, but a second time, December of last year. And a couple times, one time in January. And that was it, 91.50. You're double topping locally, and an 88% retrace from your 2014 high to the COVID crash low. Deep value perceived areas for shorts, double topping at an 886. This is it. I love it, man. This is TA. This is why I've been obsessed with this stuff since 13 years ago, because it's so perfect. Let's see how bad it is. Look, like this is it. The bearish divergence on the second high, and then locally what's going on the second high, chat. Look, think about it, like one high on a weekly time scale, and then the second high later, months, 6 months later. And then on the second high, looking for a head and shoulders pattern, a rising wedge, or a 3 falling peaks. And that's what's happening here. And it's discernible on the weekly, so you know it's other people around the world can see it. That's it right there. 3 falling peaks after a deep 886, bearish divergence in the weekly, up thrust, back test of up thrust. That's it, man. That's it. And of course, we could do something like this if you really want it. I don't even need to, but if you want it, okay, cool. Let's do it here for fun. There's your rising wedge if you wanted it, okay? It's just disappointing. Can't get more people to give a crap about this stuff. I just don't know why. It's insane. People care about Pepe coin and stupid thumbnails with people's mouths open and like, you know, oh, I'm gonna make a call on Bitcoin today, man. All right, cool. So much thought going into that. So much investment in yourself that requires somebody to have an opinion on Bitcoin and where it's going today. This took forever to learn this stuff. Forever. And that's like all I'm trying to do is just teach this stuff to other people now, because it's so fascinating. It can be so fascinating. It doesn't always work out, and it doesn't always play out. And you know, false bearish breakdowns, false bearish bullish breakouts. But dang, man. Okay. It's gorgeous, dude. It is absolutely gorgeous. I'm so beside myself in a positive way on energy stocks. Unfortunately, we could go to like PayPal and stuff, and I think you're screwed. I mean, like, it might be getting ready for $42. I'm not even kidding. There is no liquidity, no demand on these assets. No one's buying this stuff. Nobody. Another sign of weakness today, down almost 4%. Right at where you're at this low from February 2018. And it's a little zone here, man, okay? Like, it's not going to be perfect, but I think that's part of it. I think it's really important here. Below 72.24, 68.59, below 68.59 is $42. So much distribution. And too many signs of weakness here. And then Square also, the same situations going on where it's like, oh, you would think, oh man, this should be it, right? And you just closed below the ice line. The ice line of ice lines, the high from March of 2018. It's broken, and now the next target's 55.82, and below that, $34. Yep, this is sad performance. When you complete a massive M shape that's 1,000 days large, and this is what you do over a year, you better pay attention. This is just a pause. This is not a real reaction anymore. This is just bearish consolidation and a very long-term downtrend. Yeah, I'd be careful on Square and PayPal, because the poor Kathy Woods about to get wrecked, man. AZ, it doesn't matter, right? Because it's like, if a tree falls in the woods and no one hears it, does it even matter? And that's me streaming this stuff. Look at Bitcoin right now. We are on a mega breakout watch. May not believe it, but it's happening right now. 28,800. It's not a joke. That you could be going straight back up to $30,000 above this level, and that's magic stuff, man. Wow. If you want to continue on the journey of legendary stuff, how about you take a look at a semiconductor with a completed bearish shark starting to maybe roll over, react here. It's still very elevated, but this is it. This is where, if this is respected, it ushers in the entire reversal of this mega trend you've been on since the COVID crash. Don't count it out, man. Please do not disregard harmonics that have been around for 15 months, that 15-month development here. It's incredible, okay? Wow, and actually making it pinpoint, it's perfect. The Garley right here even ushered, it was perfect too. It was so well respected. It was a trade setup and played out. But then eventually it came back down way lower, and then you rallied off of that. So semiconductors, man, outside of Nvidia. ExxonMobil. Wait, did we look at that? I think we already looked at ExxonMobil, right? Yeah. Okay, let's go Wells Fargo. It's a too big to fail bank that's in a long-term downtrend, and it's rolling over a big. Hey, we have a bearish abandoned baby confirmed. Hype in the chat for Wells Fargo's a bearish abandoned baby. It's amazing. I love that. So the follow through, take you down to $37. Unreal, man. Just, and then way lower, dude. $34 and then $23 after that. Like, my God, man. Hidden bearish divergence. First level of negative momentum off the hidden bearish divergence today. Not yesterday, today. Rite Aid. All-time lows today. Lowest candle close ever. Lowest price ever. Bankruptcy. Connect. In time. $1.92, $1.92. You've never seen prices that low ever. Took out a 2008 low. Took out this low from eons ago. Or was it even, it was 1970 something, right? Yeah, 1974 low. And now you've never been this low. You get, this is, 2023 is not a joke, man. 2022 and 2023. It's like 2000, 2001. SunPower. This is like your solar power. Oh, they're so done, man. Like solar power, how are they going to turn? They don't make money, right? Ever. They're just subsidized alternative energy sources, and these are companies built off of that. Okay, well, let's see how it performs. That type of crap performs in real recessions. 768 target from here, eventually. Oh my God. Boston Properties, which is commercial real estate, on the verge of collapse. The target is $43, $44. I don't know how any kind of commercial real estate company is gonna not go belly up eventually. You're already at the lowest prices since the global financial crisis in 2009, but just like, July 2009, that's where you are. But the next support is down here. Just going across the markets, man. Okay. Just looking at some of these, because why not? AT&T, got to keep our eye on this one. This loser. Look at this, man. You can't make this up. Think about an asset in a long-term downtrend, indubitably. A reflexive rally off a key inflection point, and then the rally takes you to virtually an 88% retrace from that previous high to low. And then the momentum shifting pattern, earnings, and your lowest daily candle close today since October of last year, and lots of downside from here. 1643. Yep, and then $15 after that. Downtrend, man. Reliable structures, right? Because it's a bearish reversal. or bearish continuation reversal, right? In a downtrend could be reliable. Could outperform. Tyson's Chicken. I'm look at this one in a minute. This is the tendies chart. They're laying people off, man. All right, the tendies. Oh yeah, look at the shooting star yesterday. Wow, what a perfect shooting star. And now the follow through, gapped down too. So confirmed shooting star at a supply line in a very well pronounced downtrend. So you would think next target eventually 55.89. You got kind of a little confirmation high here too. Bro, this market's chicken tendies down at $56 again. That's the target. Why not? Look at history. Oh, straight up, straight down almost every time. Yeah, man. It's the chicken tendies, dude. ALB. Remember, it was a head and shoulders. It played out, but underperformed. And then another rally. And then on the weekly, the Terra Luna fractal, right? Terra Luna fractal. Natural gas fractal. One high, then the second high. And on the second high, it's higher than the first high in the head and shoulders. And look at this bearish back test in February. What was once resistance in November of 2021 is now resistance again and collapse. Working on a bearish weekly bearish engulfing candle. You already had one, third week of April, and now another one. And this 3 days to go. But you're working on the lowest weekly candle close since June of 2021 on ALB. Able Mabel. Look at this, right? Remember? And then you look at, yeah, no, it's like, what would you use this example? Because this is it, man. It called everything. I'm telling you, I'm not kidding. Go to the daily. It's the same effing picture. Same picture, man. All right, let me, well, we already looked at CDE. That was the only request today. Been live for an hour and 20 minutes. One request. I don't know what to do, man, right? This is like bad times for the streamer. IT, let's check on that bearish harmonic. You even like just can't believe people just don't even give a crap. It's hilarious, man. It's like it's over. Like this trend is reversed. Complete reversal of the trend on Gartner. The run, the money printer, and it's done. All right, what happened? Earnings today. I don't care if they had a beat or not. Look at the price action. The 200-day simple moving average is being regarded as resistance. $311, which is a key inflection point. Look, high from 2021. High from February 2022, April 2022, August 2022, September 2022. It's now resistance and a covering of the previous candle, almost, right? Bearish engulfing pretty much below this inflection point. The price action correlating this level, that is really, really bad. So much downside potential on IET. Been waiting for 84 years too for that type 1, type 2 shooting star. Man. Interesting how Bitcoin just can't, dude, this level is just unbelievable. No way you're breaking it. If you do break it, you're falling right back below it and you're going to back test it. Go F yourself. That's Bitcoin at 28.8. Just never going to break it, man. Never going to break this 28, this 29 to 31K level. Just too much, so much supply, man. So I guess let's you know, let's try to do what I can, try to keep it going, because I'm not going live tonight, of course. Why would I go live tonight? Well, I'm live right now, covering everything I can. And
Hey,
Google
Mitch,
down
just
1.7.
I'm always watching when I can. Love you, man. Kangs.
Thanks for the 1337, Mr. Anderson. Appreciate that. Thank you for watching, as always, dude. Been around a long time. Grateful, dude. So, Google, though, right? Hits the 382, respects the TA, respects the Fibonacci, golden zone. But so far, that's it. You're rivaling the high from February, but you can't break it. That's weak, man. That's not what you're looking for. That is just not bull market stuff. You should be breaking that crap, going 117 insta, 50% retrace. Go test these highs for June. You can't do it, man, because you're maybe putting in a confirmation high in the downtrend, which means distribution. Far less market participants involved now and in February than before. Way less market participants. Bear trend. Until that changes, that dynamic changes, you're in a bear trend. State Street, just looking at this, it's pretty bad. Pretty bad, man. $67 incoming, you'd think. While the Container Store, another fresh low, another fresh multi-year low, lowest close since like June of 2020. Broke support, then back tested the support as resistance, and then just follow through the downside. Ugly. Real ugly. Yep, I just don't trust this market at all. No change, right, in terms of how things are. Bitcoin is Bitcoin technically isn't like a great argument for like fresh longs or value or anything like that, but fundamentally, Bitcoin, Ethereum, it's mainly Bitcoin. Like Bitcoin Maxi, yeah, pretty much. Proof of work, yep. Decentralized, yes. So Bitcoin Maxi, sure. And the fact that the whole change with the SEC warring on crypto exchanges makes it to where the S-coins can't even do anything. So, so I'm saying, like, technically Bitcoin's but fundamentally, yeah, good. Real good. I mean, let's go to 40K. Let's go to Calm, which was looking like the most legendary pattern of the year. Like, found this scanning. I was using a scanner for Head and Shoulders, found this. And where it was, the context, the fractal, everything was there, man. This is a Terra Luna fractal, right? One high, the crash. Then the attempted rally, a slightly higher high than the previous high with the Head and Shoulders or a bearish reversal pattern. But what made it so impeccable was the fact that it was at an ice line from 2015, and the right shoulder, even more so, you double topped at those levels. Confirmation of distribution, and that was it. And the gap down on earnings, and it's broken down and could be headed to $35 eventually. This is so perfect, man. This is what dreams are made of. This is knowing traditional technical analysis. This chart here, just alone, you could make money, right? Oh, we can't break 60, and it's two lower highs than the buying climax high. At this level, that's low risk, even if it failed. Easy to strategize a stop loss on the short. No need. By the looks of it. Oh yeah, Apple. Let's look at Apple. AMD rugged. Dude, again, like, I don't know what world you're living in, but they're just being long is just, it's high risk, man. Look at Apple. I mean, I'm not saying it reacted today, but it did bearishly engulf, and we are right at that 886. Look, man, 88% retrace. The first one was in March 2022. The second one was in August 2022. And here's your third one. Your third 886. With, again, buyers are exhausted according to the oscillators. You're at that deepest value area for a short. It's an 88% sale for short sellers. Or there's that much value to people that are wanting to bet against this market. And they got an edge. They definitely have an argument, dude. So we'll see though, because right, earnings is in a couple days, so you could just gap up and moon and whatever the markets say, because Apple's Apple and there are only 5 assets holding up the entire stock market. Okay, but a report where, I mean, Apple dumps, this would be the spot. This would be the perfect spot.
HSX on LSE please. At work and couple mins behind on stream.
What's up, G-Dog? Thanks 15. Oh, sure, I guess. Yeah. What's a request? Okay. Let's just go to it now, man. HSX. Well, I mean, definitely a different story than others. Wow. What an uptrend so far. But to me, you crashed. And it's been over 1,000 days. And you haven't even made a 50% retrace yet. That's like, smells like bear market rally. Yeah, 1220 is the 50% retrace. And kind of a swing low. It's like a level, like right there. 1215 is resistance, support. So approaching the 50% and this level from 2017. I mean, I like it. I mean, it's cool that it like, hey, bud, we're something like that. You get this big old channel. It's like a midterm uptrend, like in an uptrend. But just know, like, this is just churning, and you're in the golden zone right now of the attempted rally, right? It's just like it's the same thing with Bitcoin, right? Why do we think Bitcoin and Ethereum are going way higher? Because the same argument for this, like, hey, man, high to low. All right, well, we'll hit the golden zone, which is between the 382 and the 618. And that's all this asset's doing in between these two levels. At any point, though, whether 382 was an initial pullback, and then sideways for like a year plus, and now you're finally breaking that level and running just to the next fib node, which is Dow's theory of 50%. And you can go higher. You get the 618 at 1350, and you're at the top of this little uptrend, this bearish consolidation, and it could roll over at 1350. But just think about it like that. I mean, that's in my opinion. You're just doing normal stuff in a bear market. After the crash, this was ushered it all in. And this is the process, right? The crash is the event more so, and then the process is the bear market rally. And then eventually it would roll over and continue to descend. But that's kind of where I'm at. Not great, man. Some Nico, thanks for the 223 super chat. Much love. This Bitcoin just can't do it, man. You're just not you will not pass. Gandalf is here. Gandalf is at 28.8. And he's cursing you out, okay? He's like, you're just not going to break 28.8. I don't care that regional banks are collapsing. Screw you. Yeah, AMD is down 4% after hours, and I just got to understand here. There's a lot going on this chart. But bear market rally stuff, kind of, I think. Look what happened. What did the asset really do? Well, from the high, all-time high to the lowest low in October, it has achieved a 38% retrace, which we understand is common retraces. Between 382 618, you did it. And then that was it. A little bit higher, up thrusted through a key inflection point and then failed. And then you started rallying, and then you're down again 4% after hours on earnings. You know, who knows? The conference call comes out, it could be way higher, whatever. But think about from your previous highs over here, right? Just think about like, one of these two highs, May of 2022, from the low to high, that's an 88% retrace, like deep value. It's like a bearish bat pattern. It's just, whatever. In a downtrend, you're not making higher highs, even if you go up 88% from your previous high. That's still a lower high, and that's all that's going on right now for AMD until something changes. Until you start taking out your June and August highs, you haven't. But it's cool that at least you're above the 200-day moving average, which so many aren't. Those are the worst, man. Assets falling below them. All the energy stocks falling below the 200 moving averages. Signs of weakness. The 200 moving average is down sloping or beginning to down slope. This is starting to go sideways and maybe starting to ascend a little bit. Okay, well, just here's the Qs, right? The right angled ascending broadening formation, bearish divergence. Your high to low, 88%, near an 886. You made like an 87% retrace. You haven't even formally tested it yet, but I think one high, the slightly higher high, that is a bad combo for bulls, and that's like where there could be a lot of downside here on the Qs. Brad, I don't know if you were here. I shouted them out before you were here, I guess. So just letting you know. Let's look at Walmart real quick. That, man, I'm telling you, I thought I was going to do it. This is like, forget about the company and just look at the chart. This is perfect for a short. It is. But it's Walmart. So it's like, how these boomers are at BlackRock and, we're just going to keep Coca-Cola and Walmart and McDonald's, just keep going. Apple, as the world collapses. Okay. Well, so that's the issue with Walmart. But just talking technicals, you have a trading range since 2020, up and down through it. But you failed to break it in November, and then you created the W shape, the bearish shark pattern, and it completed, and it's the second failed attempt. And it's like, so even if it fails and you just keep rallying because it's bullcrap, because Walmart, man, this is the lowest risk area for shorting something. You just can't tell me it's not, even if it fails. You would lose minimally. But of course, we have to wait for stupid earnings. God, effing earnings, May 18th, so you got time. But this is where, if it's not Walmart, it's some other, like an S coin or some other random stock, this is it. This is the short area. It's where one goes short. Yep. Low risk. And then the downside. I mean, if it played out, which it may not, and I understand that, but like you have like 12% downside on Walmart if this actually is real. And think about like a high to low, from this high here to the low. Where is it at? Near an 886, and that's what I'm saying. Yep. So that's it, man. That's what was there to talk about? Well, I think like something like Oracle is about to get nuked. By the looks of it, anyway. Just look at like Oracle, ORCL. Look at this like rising wedge, and and these earnings coming up, or it probably hasn't even happened yet. But like you're setting up like bearish divergence on the weekly, right? And then your high to low, you're at a 78% retrace. There's a 78% sale for short sellers. You know, you might go to $100 to hit that 886 and to complete the bearish shark pattern. I get it, but man, you're just where you are right here, man. Let's go to the 3-day. I think is where it's all at, the magic. Oh, look at the bearish divergence on the 3-day and the 786. I'm just like, man, if you go sideways route, you could maybe get to the 886 and still stay inside of this wedge, kind of maybe. But when earnings, you know, you got another 2 months almost, right, on this one. So things to think about. It was up today. No, it was down 0.07%. Sorry. Okay, PAC W after hours is up 3%. CMA is up 0.81%. So these, you know, they're kind of holding in there. Okay, so some of these banks after hours are kind of trying to do something. God. Where's UBS? Yeah, UBS. Look, what is that? It's a bearish dragon pattern. And you talk about energy stocks, right? The XLE. This is so similar, man. How is this not a good area for a short? How is this not a good area for a short? Where market participants, the buyers, pushed the price in February of last year to that level. They failed. Big drawdown occurred. Then an attempted rally. A slightly higher high than the previous high. But failure in the end. Utter and complete undeniable failure. And locally, one high, the second high is lower than the first high, meaning distribution's going on at a major reversal area. And now an identifiable pattern, the dragon, potential dragon. It's got to break the spine, but I just don't know what would be low risk if that's a hidden bearish divergence on on that high, and that's a bearish abandoned baby too. Are close enough to it. Lots of downside on UBS, the bank, but hasn't really done anything, hasn't really gone yet. Okay, how many assets did I look at today? A lot. So whatever. All right, I'll leave you to it. Do your thing. Thanks for watching. Thanks, William, Mr. Anderson, G-Dog, and Nico. Thanks for the contributions. And I'll just be back tomorrow. Until next time, respect the TA.
Feel